Welcome everyone to WITI Conversations. I'm Kayla, the host of the show, and on today's show we have Merlin Rothfeld with us. He's an instructor at OTA, he does content development, he's got 25 years of trading experience, he's a crypto connoisseur, the list just goes on, but welcome.
Thanks, I'm starting to blush a little bit over here, but thanks for having me on the program today.
We're so glad to have you here, and on today's show, what we're going to talk about is this infrastructure bill. What is it? What's in this? Merlin and I talked before the show. We're actually going to go through page by page all 2,700 pages. So kind of buckle up.
Buckle up, get ready, folks. It's going to be a 17-hour show today.
This is going to be a good one. So we want to talk about what it is, what's inside this, and most importantly, how it affects us as traders and investors. So let's dive right in. First of all, what is this? It's this $1 trillion plan for infrastructure.
$1 trillion plus. I mean, at this point, it was $2 trillion, that's $1 trillion, and who knows, we'll come to some middle ground. For me personally as a trader, I might not give the opinions that people want to hear, right? Because I think most people want to hear, well, the infrastructure bill is designed to make America great again, to make it a better country and improve our roads. To me, this is just a political showcase. Now, as a trader, it doesn't bother me, right? I don't care. I want movement. As an American, I would like to see the infrastructure bill because I want to see roads improved. I want to see, internet access for everybody. My problem with the infrastructure bill is this. It's so all-encompassing. 2,700 pages, and I'm sure you've read all of it, right?
All of them, yes.
Yeah, nobody has. I don't even think the people who are voting on this bill have read 2,700 pages. They have people briefing them and telling them, what does it say? What should I know when I go and look intelligent on camera? Out of all of that, money will go to America. Bottom line, right?
Right.
The question is, where is it going to go? I mean, you hear these horror stories of government agencies paying $1,700 for a hammer that I could go to Home Depot and get for $6. You know? I worry that money might be going to the wrong place, might be going to the wrong people, the wrong interests, but money is pouring into our market, period.
Yeah.
So as a trader, love it. Bring it on because that will create volatility. It will create moves to the upside, moves to the downside, and really for me, it's all about the opportunity involved. So as much as I want to say I know every detail of the infrastructure bill, I did read through a lot of it, paraphrase, of course, the Cliff Note version. And I've done shows on this where I've gone through and said, what areas do I think might be impacted most?
Yeah.
For example, we talked about concrete companies.
Yeah.
Roads, steel, great. So let's look for steel manufacturers. Let's look for concrete companies. And those charts are already parabolic.
Sure.
I mean, they look like the price of Bitcoin.
Yeah.
It's straight up.
Super
so
steep.
People are looking at this going, oh, infrastructure bill, good. I'm gonna buy some stocks. You will probably be the one that's holding the bag because it's a buy the rumor, sell the news type of event. And the news of it being finalized is coming up here. When?
Sure.
Well, that's a topic of discussion.
Yeah, the move's already happened, and we'll see kind of what happens when it actually comes out. Speaking of which, there are a couple of dates kind of that we can look forward to with this, and something that I talk about a lot in my classes is knowing the timing of when these events are going to come out. And so we've got October 31st as sort of a targeted deadline for this, kind of bill passing through the House and getting to President Biden's desk. Probably because Nancy Pelosi loves Halloween, I'm guessing, right?
Sure.
I mean, it's a great day.
Halloween too. I'm a Halloween fan myself.
You're a big fan.
Of all the days to make a deadline, I think Halloween has got to be the worst choice.
It's quite interesting. Well, I mean, I don't think that Nancy Pelosi loving Halloween is the actual reason why. They've, kind of extended some spending bills that will expire sort of at the end of October, so that's one reason. Another is that President Biden's actually going to Scotland for a climate change sort of convention by the United Nations.
Sweet.
He's not going to want to go there empty-handed. He's going to want to be able to show, look at this is what we're implementing within the U.S. So that's one. And then, Merlin, you actually did a segment recently on the debt ceiling and how we kind of narrowly missed
Which
a
is
government
just like the 31st, right? So it's funny, you talk about the 31st being the deadline for the infrastructure bill. And of course it was, this date and that date and the other date. The challenge I have in saying let's fixate on October 31st, because we should be, looking for these dates, and hopefully our elected officials will do their jobs, whether they're Democrat, Republican, Libertarian, who cares? Do your job, and let's either pass this thing or not, but quit the soap opera. My guess is on October 31st, there still will not be a definitive resolution, because what happens in this situation is you have one party says, well, we want to achieve this. And the other party says, well, we're not going to vote for that unless you let us achieve this.
Right.
And so we get this pathetic political banter back and forth for months and months and months. I hope it happens October 31st, because it would make for a great kick to the end of the year. But I just have a lack of faith in it, just like I do for the debt ceiling.
Yeah.
You know, the debt ceiling, we have this hard deadline. It's got to be done by this date, October 15th. The government runs out of money. You know, oh no, freaking out again. And then now it's like, yeah, let's just kick the can further down the road. And this has been done. Every debt ceiling meeting has been, let's boot that can further down the road, further down the road, further down the road. And, you know, my cynicalness says it's just the political elected officials not wanting to deal with it.
Sure.
So we'll just, look, next administration, just keep kicking it down the road. So, I mean, we could go into the importance of the debt ceiling. I think that there's some very important pieces about the debt ceiling which will impact our markets directly, much more so than the infrastructure bill.
Yeah, interesting, very interesting. I mean, we could have a whole segment on that alone. The important thing is knowing kind of these targeted dates, but also knowing that they could change. We know how things go in this political world. So let's dive right into it. I think one big piece of this bill, and you sort of touched on it earlier, is climate change. You know, they're looking for more climate resilient options and kind of moving more towards clean energy as opposed to dirty energy. And those are markets that are traded. So how do you think that's going to affect the markets and which asset classes and so forth?
Well, again, when you go back and look at, you can go back to the last election, and there was a belief that if Biden was elected, it would be very heavy on clean energy. Well, going into the 2 months before he won the presidency, those securities jumped the double, 2x in value. So again, it's kind of a buy the rumor, sell the news type of thing. And while I applaud them, because I do think we should be focusing more on clean energy and being a little bit more considerate for the earth and getting away from things like coal and polluting rivers, let's go with clean energy, but to what extent? There is some truth to the fact that a lot of these pieces allow us to have quote unquote clean energy, require pieces that make Earth really dirty. For example, you could look at electric vehicles. Oh yes, they're saving gas and fossil fuels. And then you look over on the other side and go, well, we need to dig all these lithium out of the Earth and we just flood rivers with toxins. But hey, we don't have gas anymore.
Right. At least it looks good.
It looks good on paper. So there's always to me going to be a trade-off there. Again, for me, the perspective I'm taking is if you look through the infrastructure bill, you can start to identify where that capital is going. Now, I don't know specifically which companies, right? But in looking at one of the major allocations of capital in the infrastructure bill, it was to road improvement. Okay, great. So who are the major, road manufacturing companies? Equipment, steel, asphalt, aggregate companies were also in popular demand. But again, in people watching this, what I want to encourage you to do is not run out there and say, I've got to buy material stocks. Let me go buy aggregate and concrete companies. Why? Look at the price charts first and see where they've come from and where they've gone to. For me as a trader and somebody who's a practitioner of supply and demand methodology, you have to understand it's already happened. So we have to, I guess put our emotions in check because we'd love to all make money off of a move up in.
Of course, that's the goal.
Yeah, right. Want to make money in these markets. But if it's already moved up 100%, how much quote unquote meat is left on that bone for you to capitalize on?
Definitely.
Probably not as much. So really market timing and supply and demand is more important in saying, yes, I do believe that alternative energy, wind and solar might do very well, but I'm going to look at that price chart first.
Absolutely.
And I'll look at it and say, where's a point where I would be interested in buying it as opposed to going, I've got to buy it, I'll just buy it, right? Emotions got to be put in check.
Absolutely. And that goes for any kind of trading. Always got to have a plan, always got to have a way to analyze the charts and not just trade based off of these news events. So we're probably going to look at a shift towards some of these clean energies, and for dirty energies, something like crude oil, that could definitely be impacted as well. And so there might be some probably, I guess, maybe long-term opportunities with that, or maybe some volatility would come in day of. I mean, there's some opportunity there.
I think with crude oil, we're still addicted to crude oil, right? We can say all we want about, we're going to turn into alternative energy vehicles by 2030, or we are still,
sure.
Tie me off. Give me some petroleum products. I think where you'll really see the shift is away from like the ultra dirty stuff, which is like coal. Right, with these big mining operations, just clean coal, which is the ultimate oxymoron. That will probably start to see some pressure from administrations with regards to how dirty it makes things. But is fracking going to get hit? Is it going to be the shale basins? Is it going to be oil? I don't think you'll see that much damage there.
Sure.
But I do think you'll see more focus on alternative energy, wind, solar, even ocean tide type things where we have all this space we could be using to create electricity. Awesome. Now, what I don't know is in the infrastructure bill, which specific companies are getting this money, right? It's very broad. It's like saying, we're going to give it to solar companies. Okay, so how does that get distributed, right? Am I a solar company? Do I have to go and pay a lobbyist like, hey, here's some money, let's get me on Capitol Hill, and give me the contract.
Right.
And again, that makes me skeptical because I know that there is going to be money given to the wrong people.
Always is.
It's frustrating.
It seems like
our
there
political
always
system is what needs an infrastructure bill.
Yeah,
right?
yeah. If only. If only. All right, let's move on to something else that this infrastructure bill is looking to tackle, which is broadband internet.
Yeah.
So infrastructure, looking to spread internet really to rural areas, make sure everybody has it, and kind of subsidizing internet. So what do you think about that, Merlin?
I think it's saying something nice so you sound like you're doing something good, but it really doesn't matter. If you go back to 1995, 15 million Americans were using the internet. 1995, right? Were you around? Were you there?
Yeah, I was around. I was
really tiny.
Real little, but I was around.
You fast forward to 2020, so go back a year, there was, I believe it was 280 something million people using the internet. So if you look at our population right now, roughly 330 million, that means we're looking at about 86% of America has internet already. So first off, who's these 14%? I got to figure out who are the 14% not using Facebook
Right.
and Instagram and checking emails.
Not
I don't know who
addicted
you are.
like the rest of the
Right?
world.
Like, I got to check real quick. Hold on.
Yeah.
But yeah, I think it's good because one thing that I really appreciate about the internet is it's brought a lot of people up to I guess a better standard of living and access to information they would not have normally had access to. One of the things I actually been following in cryptocurrency is how Web 3.0 is going into areas of Africa and doing this because now you can offer internet to the most rural parts of Africa, right? And in that you have people who've never had formal education at a high level, and now all of a sudden they can be taking MIT classes. So you start to bring up global economies with education, which is education is power.
Amazing.
You know, obviously this infrastructure bill is focusing on the U.S., which is great, and certainly broadband internet should be there for everybody. So good for that. Yeah, I'm glad to see that.
Yeah.
But I want the potholes fixed on my street first.
Right, exactly. Well, something that I thought was interesting is that what really bogs down the internet is big streamers. So your YouTube, Amazon Prime, Netflix, of course, Disney Plus, Hulu, all those. Even Xbox.
I don't use any of that
No,
stuff.
right.
Nor do I have my own show that streams every day.
Me neither. But what I read was that if they were to pay for their usage, if you will, there would be no need for these subsidies. So just kind of interesting. I wonder if maybe they're the ones benefiting from this.
They might be.
Just a thought.
I mean, certainly the more that you open up access to the internet, the more likely they're going to jump on to Netflix and Google and all
faster
that.
streaming, all that good stuff. So let's move on. It's really just the spending in general. So obviously this is being allocated to climate, to this and that, to infrastructure, roads, bridges. But it's really just the fact that we've got to spend this money in the first place, which is going to come from printing a lot of money.
Printing in taxes.
And taxes. And so how is that going to affect the market? Because that's going to bring a lot of supply of the dollar into the market.
There's two different sides to this one, and this is really interesting. If you look back into from 1950 until 2020, they increased the M1 money supply $2.5 trillion. So in 1950 we were at 1.5, and in 2020 we were at $4 trillion of M1 money supply, which means the amount of physical dollars circulating and cash deposits in your bank. Since 2020, since the COVID pandemic, we have increased another $15 trillion. So for 70 years we increased $2.5 trillion. And in a year and a half to 2 years, we've increased an extra 15. It's ridiculous. Now, anybody who knows supply and demand math equations would know that if you increase the amount of money in circulation, it devalues the money you already have. So you could probably hold up your $20 bill over the last year and a half and just watch it deteriorate in value. It's worth like $17 at this point. But that money printing certainly will have an impact. And my economics degree, one of the first things my professors were talking about was inflation, right? And you listened to Jerome Powell a year ago, inflation's transient. First off, I think that's a mean term. What does it do? Is it sleep on the sidewalk?
Right.
Transient inflation, just over here. Then like 2 months ago, it became moderate. And now it's elevated. Now you're hearing some central bankers go, we have a problem, Houston.
Right.
Gee, I wonder why. You printed $15 trillion alone to help get us out of this. And it's like, you're hurting the economy. Now, most Americans love it.
Right.
Because what has this done? It's brought all of a sudden stock markets at all-time highs, businesses are booming, even though AMC is like rocking towards its all-time highs, and they're not even open. How can you be at all-time highs and you're not even open? It's like, what? Thank you, Reddit, for that. But for me, there was two pieces you had there. One was the dollar printing, and what was the other one? You had one other piece that was really.
Well, just the spending in general, printing and, of money.
Yeah, there was the inflation side of it, and that was the main piece, which you have this spending piece, but there was another one that was in my head, and I was like, I wanted to get into the second topic, but I can't remember what it was.
Well, when that comes back, we'll circle back
in at some point.
I know what else is going to affect is kind of other major asset classes, or assets, I should say, which is gold, for one, bonds, just currencies. I mean, obviously the dollar is a currency, but talk a little bit about that, how this is going to affect those assets.
So historically in markets, there's been this relationship where when you have a high inflation type environment, there's a rush to safe haven assets. And granted, commodities can be very volatile, but in theory and historically, gold has been that safe haven. So in full disclosure, I am long silver, I am long gold right now. So just making sure you guys know that one. But why is that? It's because the dollar is going up so much in value, it's creating inflation, and the historic hedge for that is gold. So we might see that continue. It's interesting because gold and silver over the past couple of months has actually been slowly dropping. But ultimately, I think if this continues to be pressed forward and we see more spending, I think you'll see those asset classes start to rise. Because remember, a strong dollar, if we see inflation rise, the dollar gets weaker.
Right.
And that's great because what happens is means international people can buy more of dollar-denominated assets, right? So let's say the dollar drops 50% in a year. If my car was $50,000 on year one, and year two it's now $50,000, but the value of the dollar has dropped 50%, a foreigner can come over with $25,000 of their currency and buy that same car. So they can buy more of it, and since most commodities are priced in US dollars, that ability for them to come and buy more of those goods and services boosts those prices of commodities.
It brings in foreign investments.
Sure.
And the same thing goes with bonds. Bonds are seen as sort of a safer investment. So when the dollar is losing value, we switch over to bonds, which isn't the only reason that bonds are going to start moving. The interest rates have a big impact on that. So talk a little bit about that.
So this is really the double-edged sword here. So what you have with bonds is a funny situation. Normally in a free-floating, fair market, bonds would be a safe haven, right? You get a steady stream of income, a steady stream of payments from bonds. However, if you look at what's going on in our bond markets right now, it might even be more manipulated than the U.S. equity markets.
Crazy.
You have the Fed is buying $120 billion a month, mind you, a month, not a year, a decade, but a month of $40 billion of mortgage-backed securities and $80 billion of treasuries. That's propping. It's the old proverbial the drug dealer getting high off their own supply, right? You never do that. So you have them basically buying all these bonds, which is they're trying to drive the price of bonds up, which pushes yields down. A low yield on bonds is good because that means you have cheap money. You can borrow money at a very cheap rate. But it's completely artificial.
Right.
You have an absolutely fictitious person who can literally print money out, and they don't print money, by the way. That's a fallacy. They go to a digital ledger and just add zeros and make whatever they want. They don't print anything. But what happens when they start to taper, or they're forced to taper? All of a sudden, you start to see the yields spike, and we've seen the 10-year spike significantly. Yeah. It was up over 100% in the last year. That means that your mortgages are going to start to get more expensive, and that means the cost of capital gets more expensive. More importantly, if yields rise too much, what it means is the companies that have borrowed money might not be able to make their debt obligations. You see that with Evergrande in China and many others. All of a sudden it's like, oh wow, we borrowed so much, we can't make our payments. Then you come into a situation like default. We're going to talk about debt ceiling default as well. But that is a real risk for bonds. And I would encourage anybody who's especially in the older bracket, if you're looking at retirement, you're taught to steer your portfolio into bonds. I'd be very careful doing that. I think that there's other strategies out there. You can do bond ladders, you can do barbells and things like that, which will help mitigate the risk, or treasury inflation protected securities. There are things you can do that might be slightly safer than just going into corporate bonds or something like that, which give you a steady income stream, but has a lot of risk to it.
Yeah, well, and thankfully, Online Trading Academy actually has a signature series on bonds.
Bond Aid.
That is one of our most popular, I would think. So
that's great. It really is.
Bond Aid is not just such a great name. So that is a resource as well.
And so then, I remember what I wanted to talk to you about.
Oh, hit me. Go.
Debt ceiling. The debt
ceiling, yeah.
Okay, so let's go into paint the worst possible case for the United States of America.
Okay.
So in 2011, we had an issue where our debt was downgraded, right? So we went from AAA to AA. That's really bad, right? And the gall of S&P to downgrade America. It's like, right. Wow, you're a small company in America, you just downgraded the entire country. If we default, and that's the concern about this debt ceiling and why I believe it's being kicked a little further down the road, is there's a concern that the U.S. cannot pay its debts. And of course, if you look at the amount of money that's been printed and debt obligations to international countries, it is pretty astronomical how much we owe every month in interest on debt. At a certain point, we will get to a place where we will not be able to make those payments. When that happens, the question is what happens? You know, you increase the debt ceiling and you print more money, fine, that might work. But ultimately what I think will happen, and this may happen in December, is we will probably get downgraded again. If we get downgraded again, what happens is the entire global community looks at America with stink eye. You know, like, you can't pay your debt obligations, I'm not going to be buying your debt.
Right.
The worst case scenario is that we default. And honestly, it's not going to happen. It will not happen. They cannot let it happen.
You heard it here.
They can't. If the U.S. defaults on its debt, that means that every country in the world that has borrowed money or we owe money to literally want to pick a fight with us.
Yeah.
Right? I mean, imagine if you stiffed a loan shark. I can't pay that debt. You hadn't been swimming with the fishes, Tony. You know, that type of thing. And China is not going to stand there idly if we just say, by the way, we default, we don't owe you anything. They're like, no.
Right.
We're going to be invading your borders real soon. You know, it won't be a default, but a downgrade is very likely, and I think that could be a really negative piece for our markets.
Yeah, that could be an issue.
Which, by the way, I love. As a trader, look, drop the markets 50%. Yoo-hoo! Bring it down. You know, I think it's a good thing if we know how to plan for it and prepare for it. The average person, though,
does not know how to plan. Is not really well diversified in their portfolio.
Or have risk management or stop losses or anything like that.
So many things, yeah. So another, just real quick, another asset that's going to be affected by this kind of influx in supply of the dollar is currencies, of course. So the dollar's inversely correlated to all the majors, and that's going to cause a lot of
You're an international traveler, so you know the value of understanding currency and exchange rates. Look, if you're somebody who lives in America and you're never going to leave the confines of the United States, who cares what the exchange rate is, right? Weaken the dollar, big deal. But if you travel at all, or you buy products from overseas, which you probably are, shopping at Walmart, you're buying from China. There's a currency there between the yuan and the US dollar. It's impacted. So it's not like it's a good thing or a bad thing that the dollar rises or falls with regards to currencies. It's just a tradable event, right?
Yes.
So if I know that the current trend in the US dollar is in one direction, great. Then I might be buying US. Let's say it's, at this moment in time, if you have a pretty bullish move in the US dollar, great. I would like to hold more US denominated assets. But if all of a sudden that changes and the dollar starts to slide, I'll be looking over and saying, well, maybe the euro is the safe haven now. Maybe the yen or the pound or some other currency is where I'd like to park my assets. So I will actually be gaining purchasing power over being in the US dollar, which is losing purchasing power.
Yeah.
So I think it's opportunity.
There's a lot of opportunity there for sure.
Huge.
Yes, definitely. So, okay, we have to move to a topic that I know you're dreading, cryptocurrencies. Yeah, I know you're so bummed out. Merlin is just pretty much an expert in cryptocurrencies, knows them inside and out. So this bill does address cryptocurrencies a little bit. So how do you feel about that? What do you think?
I think what it is, it's an example of the stupidity of our members, our represented and elected officials. Like it is, you could not be dumber in what they're doing. So what they're doing is they're taxing anybody that has anything to do with cryptocurrency. So basically there's a provision there that says they want to tax brokers. Okay, well what's a broker?
Right, yeah, what is it?
And apparently our wonderful elected officials, again, not a Democrat or Republican thing, you're all idiots. They cannot decide on the definition of broker.
Yeah.
So what they've done is they blanketed the entire industry, which is it's gonna hurt the industry.
Yeah.
A broker should be somebody who is physically taking capital from somebody and facilitating trading. So like miners, for example, cryptocurrency miners is literally a computer that's turned on and all they're doing is verifying transactions. They're not doing anything else but saying, do you have money in your account? You want to send it to this person's account? Do you have permission to access that money? Done. They verify transactions. So they're included now as being taxed in the infrastructure bill, and they have nothing to do with it. So I think it was a real slap job, and it makes me question everything else that's in the infrastructure bill.
Totally.
And the politicians want to get something done, right? To their constituents, they want to look like they've done something. So it's very easy for them to go, that's great, tax cryptocurrencies, tax bonds, do whatever, just tax. Fine. I just don't think it's the right thing to do in all situations. And I believe if we had clearer direction and more intelligence around the whole process, then I think these infrastructure bills or any kind of spending bill the government proposes could be great I think that a lot of this money here won't go to where it needs to go.
Yeah, it makes sense. I mean, they probably don't know as much as you do about cryptocurrencies. That's probably one
not.
of the issues.
But again, as a trader, I don't really care. Let's just give me up moves, give me down moves, and if it goes sideways like the Russell has for an entire year, give me some spread trades.
Yeah, absolutely. And speaking of that, Merlin does have a course the digital assets course.
Yep.
So that is definitely a resource for you. You can go to tradingacademy.com/crypto to see that, and to see a part of it at least.
Part of it, yeah.
Kind of get an intro to that and some information on that. Well, Merlin, thank you so much for your expertise. I think that we're all really excited about this infrastructure bill now, really excited about this coming out. But I really look up to you personally as sort of a trading mentor. Anytime I can kind of
Thank you.
Just get a little piece of your mind.
You have to find the off switch though, because I could keep going. I mean, we could go for another 2 hours on this topic.
I
get excited about it.
I know. I didn't mention your dog or your Halloween outfit or anything like that, because that might we could go off on a tangent. So that's it for today's WITI Conversation. Join us next time for some more.
Online Trading Academy is an education provider and does not give financial advice. We are dedicated to educating investors about responsible risk management. Take time to understand the risks and your potential outcomes before trading. Skill building, education, practice, and experience are essential for informational purposes only.